All right, guys, quick end of day video from me. This is Christian from Tribeca Trade Group, and everything that we're going through in this video is for information purposes only. So quick market recap for end of day Thursday, October 20th. Look at this. We're almost we're getting towards the end of October already. So I'm going to go over really quick with you guys because I've been traveling all week. So we'll make this brief, but I want to go over just a couple concepts so far of what we've been seeing this week and where the indices are and some potential interesting spots for some areas of the market. So S&P, we've been flirting with turning the corner here. The main thing that, again, that I'm looking at is volume at price. I'm using the MarketWeb's indicator, and we've got our value area for the month, which is based on September's price and volume action. So the level that I keep quoting is 37.46. That's the bottom of this month's value area. Also, you could see that we're kind of close to around the 20-day moving average. So we've been flirting with that, this move in the beginning of the week, but we did kind of run into resistance. So if you're interested in looking at this from a long standpoint, what I would be looking for is a move back into the value area, which again is 37.46. If we can't do that, right, then it's just another bounce in a downtrend, right? And you could see basically since, even this bear market rally that left us where at the 200-day moving average in August, if you just want to look at this picture, this is telling you plenty of information because we have a lower high here, a lower high here, a lower high here, and possibly another lower high here. If we don't kind of maintain in here and settle in and then start to kind of reverse this trend, then your eyes begin to kind of wander back to this virgin point of control takeout that we took out and bounced back on what day was this? This was on 10/13. So that's the picture that I see right now in the S&P. Of course, I use multiple timeframes in my analysis for the week. We managed to get above value. We took out this virgin point of control that was from last week's point of control, and that's basically as high as we went. Remember, the market likes to remember such things and remember where we saw a lot of volume a couple weeks ago. So we returned up to that level and got rejected. Again, a lot of overhead supply in this market, and right now, you need good, strong volume buyers to push through overhead supply. We don't have that right now. So before I go any further, and because I'm going to talk about NASDAQ and I'm going to talk about small caps as well, but right now we can bring up TLT because most people look at TLT rather than what I tend to look at, which is 30-year bond futures. But this is one of the reasons why we just can't get that strong volume to kind of come into play to push this market through some of those levels, is that you just have such a headwind against this market with rising interest rates. TLT down another 1.7%. Just an amazing trend at this point. Basically, since equities topped out, that's also when the bond move happened too, as I was going through in the previous chart. And since then, it's been a 45-degree angle, sometimes getting a little bit oversold and then bouncing back. If you note where we are again, I do think that there's a bounce coming in bonds because the RSI is at 24, but if you look at this, one thing that you probably have noticed is that price doesn't really get above the 5-period moving average. And if you want to look at 30-year bond futures, it's really even more intact when you look at it that way. We have not seen any movement above. So rates just continue to go higher. At some point, something is going to have to change that in the news. I don't know if it's the Fed or something else. But at this point, when you get this oversold, right, and here's what bonds look like really quickly when you look at all the yields, you could see that right now the 2-year is the one that's the high. Well, actually, the 3-year is 4.65. I know a lot of people like to quote what the 10-year is doing, but it's just surprising to me how high this 2-year bond is right now. It's 4.6%, right? And if we look at this in terms of the weekly chart, and I'll give you, this is something that we went over on the weekend in terms of where we could be getting down to. And notice that this that red line is becoming clearer and clearer, or coming closer and closer, I should say. 117.26. That's the level in 30-year bond futures, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight weeks of declines going on. And the level for TLT, because like I said, I know a lot of you look at TLT over 30-year bond futures. We're getting very close to that level being taken out. That's 92.10. So in the meantime, right, this is a case until this, and again, it doesn't have to be that bonds need to bounce. But I think at this point, it would certainly help to see bonds bounce. So that's what's in play right now. And, until then, I continue to be very, positioned very much in cash at this point. I'll try a couple trades here and there, a couple short-term swing trades, but if they're not working right away, I'm taking them off, given, what macro is telling you, right? And of course, the other one to look at too, which we've been quoting, basically all year round, is what the US dollar is doing, right? And that remains, above the 20-day moving average. We have not taken out this peak yet, but you could see we've got some type of a wedge or a triangle forming in here, which the trend is higher, and I would stick with the direction of the prevailing trend right now. Those are the main things going on. One other thing that I thought was interesting for the day was the VIX. It was actually down today. So I don't know yet if that's telling us something. We do have, so that's a divergence. Usually when the S&P is down, you will also see the VIX higher. The fact that it didn't go that way could be telling us something, but it's too early. Like, I think that we need a couple things to line up for me to put something on in terms of, any meaningful risk here. All right. Now, again, two different things could be happening too, as I look at this chart, is that we could be carving out some type of a low, and putting in maybe a left shoulder, here's your head, and maybe a right, coming down here and a right shoulder, but it's way too early to speculate on that. So I'll stay focused on my levels for now, 37.46. And in here, even if that does happen, it's still not a place that I really want to go crazy. I'm adding risk. I'm waiting for more confirmation, right? Waiting for some good signals. The NASDAQ, which was strongest in the beginning of the day, actually gave back gains. What I would also watch for the week, right? And I could look at Qs if you like to look at the Qs rather than NASDAQ futures, but 268.37, right, is kind of right where we're at for the valuer. So we're still holding above value, but it would not surprise me, given this move in bonds and this move in the dollar, that this doesn't break. Again, no position here. And then finally, small caps, which have been a little bit disappointing the last couple of days, because again, they were also strong pre-market, but again, just can't seem to really hold on to that strength. Also, a thing in common here is below the short-term moving averages, the 5, the 20. Now, this is still inside value and showing a little bit of relative strength for the month, but needs to hold right here, 168.45. So again, if these levels get lost, just being patient, I think, is the key here. A couple bright spots, that I thought were interesting today. The semis, even though they didn't hold the gains, there was a nice earnings reaction from Lam Research, which was up 7.8%. Another one that I thought is interesting is this ASML, which is European Semiconductors. Watch this level here, 436.62. Notice that it rallied right up to there, right? So bounce. Now it could possibly get rejected here, right? We'll have to keep an eye on that, but this is the significant level. So you got a nice bounce here after earnings, but the heavy lifting has to come here, right? So that's what I would be paying attention to in ASML. And also Nvidia is another one, right, that I actually sent out a chart yesterday. Now, it did not get into the value area, which needs to be 125.58, and you can see backed off pretty far. But I think that this is a good one to watch. And why is this a good one to watch? I put this out on Twitter yesterday, and I got some people who were like, geez, I can't look at this one. It's in the news. There's stuff going on with the chips in China. Well, you have to ask yourself, how much of that is priced in at this point, right? The stock has gone from 346 down to 121. So there is some bad news priced in. We don't know if it's all the bad news, but I would be watching this level right in here, which is 115. So again, it's got to obviously do more than that, than hold support. But this is a key level of support and has me very interested at this point. Okay, so again, don't have anything on yet, but I'm paying attention. Here's how I traded today. We could go over a couple of these trades, but very quick. Right, I actually put on because we saw there was open interest in the SMH, so the semis December 205 calls. I think it was 25,000. I think there was many more that trade contracts that traded yesterday for that line. But there's, I think, about just 25,000 stayed open interest. But hey, I was thinking that I would keep this trade on. Maybe it would take a week, 2 weeks to work out. I got what I was looking for today, and I took, where's my third target in this thing? I think I hit 2 targets. Maybe I didn't. SMH target 2. Here it is. Right. So I got quick gains out of this, one day gains, and there was no reason to stick around. I can revisit this trade, but I certainly wasn't going to let it go back below my cost basis of 390. So I'm out of that trade. And right now, that's the trading that's working right now in this market. I took a trade in Adobe because I think that this is another one to maybe pay attention to at this point in time. But this market, the volatilities is too much, because normally what would happen on a day like this is that we would have a nice move up here, maybe consolidate, sit around here, come into here, and then begin to bounce. We're not getting that at this point in this market. So it's just better to be taking the money and running. And the first sign of overhead resistance for me was the overhead virgin point of control, VPOC. So I got out of that really quick. Right. And then just took a couple other trades that, don't look like they've got the momentum. I hit 3 targets in this LPLA trade, but let's not push it here with this market. And that's a story too. Like even AbbVie, which is a name that I'll still be watching. I like cheaper names right now, which AbbVie is one of those names. But if it's not going to work, right, or if I think the slightest chance that this isn't going to work because it's back below the 200-day moving average, then I just get out of it for a small loss and move on. But I'll be watching to see if this could retake the 200-day moving average. I still like this chart. It's just the overall market is just too weak, and the macro headwinds are just a bit too much. So that's really, we started to put together a watch list so far for earnings, strong earnings names. Definitely one of the names I think to watch, a must watch is going to be this SMCI, which another strong pre-earnings numbers, and this jumped over the 50-day moving average. This is a great place to be watching